This is Talkback 721-1290 or 1-800-568-5309.
This is Newstalk KGVO, AM 1290 and 98.3 FM. KGVO, Missoula's news and weather station.
Good morning, everybody. It's a brand new week. It's Monday, November 25th, 2024. Talkback for this Monday brought to you by, and I love saying that, brought to you by Y West Storage, located out of the Y on Two Smokes Way. If you need storage, a storage unit, here's the number, 406-510-0590. They're making room for you at Y West. Phillips Janitorial does cleaning for both your home and your business, or no job is too big or small for them. The number, 406-260-6617. Also brought to you by Harrington Surgical Supply, where you can feel confident in their discreet and knowledgeable guidance on a multitude of products and medical supplies. And finally, by 123 Seamless Gutters. They handle everything that has to do with gutters, so you don't have to. And the weather is laying off a little bit, so you still have time to give them a call before the snow falls. 406-240-2669, protecting the foundation of your future.
The views and opinions expressed on Talkback are not those of the staff, management, or advertisers.
And ladies and gentlemen, we are thrilled to have with us once again the giant of the accounting world.
Yes.
Yes, of the tax preparer world. Let's put it that way.
There we go.
We have Walt Kero from Kero Byington and Associates, our resident CPA, certified public accountant.
Constant pain in the, you can finish.
Aspirator.
Yeah,
something
aspirated.
like that. Anyway, I just want you to know, Nick is not here today. He is taking one of his innumerable Mondays off because he has to burn up his PTO.
Yeah.
So Nick is not here, so I will be playing the part of producer over here and host over here. So
good.
There you go. So if I'm breathless every now and then, it's because I'm running back and forth from the phone.
To the listening audience, you're in good hands.
So if you have a tax question, by the way, we are coming up on the end of 2024, I believe that.
Yes.
Somewhere in that vicinity. And so it's about time to start gathering all your stuff, right?
Yes, it is time. And the sooner the better, because the more you're prepared, the easier job time comes.
You bet.
Mm-hmm.
So that means what? We should have all of our. Is it good to have one of those little fuzzy file folder things, or is there a best? What's the best way for the average taxpayer person out there to gather all this stuff?
Well, the best thing is to have all your records in one spot.
Right.
That way you don't have to go
and not the garbage can.
Yeah. If you don't have the records, then it's like herding cats.
Right.
You got to go find it, and it can be all over the place. So the sooner you do that, the better.
And I will tell you this: those wonderful entities that have all that information that they've already sent to you, mm-hmm. right? And you managed to lose or throw out or whatever, when you call them about this time of year, guess what? They're very busy.
Yes.
Trying to gather stuff that other people have not saved. Mm-hmm. And so you might have to wait in line a little bit.
Oh, yeah. And you don't want to have to wait in line.
Yeah. So.
Not when things are happening. And it's unfortunate, but if you haven't done so yet, the next month you're going to be busy with holidays.
Yes.
And so it's easy to procrastinate. And taxes you should never procrastinate on.
Yeah, the one thing that Uncle Sam is not patient with is procrastinators.
Right. In fact, their penalties for late filing are worse than for paying them late.
Wow.
So they really get incensed about the idea of you not telling them what's going on.
So if you're making, let's put it this way, from what all the times we've done this before, and tell me if I get this right, if you make a good faith effort to file what you have before April 15th, and then let them know I'm still working on this, will they go easy on you or what?
Well, yes and no.
Okay, all right.
The yes is if you get an extension, that's letting them know that
right.
you need more time to file.
Okay.
Doesn't give you additional time to pay, but you're supposed to have your tax paid by April 15th.
Exactly.
All
right.
Otherwise,
So we are up against our first break already, and so if you have a question for Walt Kero, he's here quite literally. His specific mission in life today is to answer your tax questions. So I'm standing here with my dialing digits, phone answering digits, ready to take your calls, and in lieu of Nick Christensen, have a well-deserved day off. So give us a call, 721-1290, 1-800-568-5309. We're going to come right back with more with Walt Kero, and of course, his amazing stack of stuff with some very important stuff in there today.
Oh, yeah, there's lots of stuff.
Okay, we're going to come right back after this.
Need top.
Dennis Bragg with your updated weather. Mostly cloudy through Monday with highs not clearing 40 degrees as we experience fairly typical Thanksgiving week weather here in western Montana. The cold and even sub-zero weather is staying east of the divide. Still, Tuesday morning temperatures will be into the 20s with a possibility of half an inch of snow in the valleys. That threat of snow showers Tuesday morning gives way to rain and snow in the afternoon as we top out near 40 degrees. Staying cloudy and colder Wednesday into Thanksgiving with a chance of light snow showers, especially on Wednesday night.
We are back on Talkback. 721-1290 is our number. 1-800-568-5309 if you have a tax question for Walt Kero. See, what you missed was my foray into the world of radio engineering. In that
you're being high tech.
The wonderful little clock that we use that is not high tech, the battery died.
Yeah.
So I just happened to have a spare AA battery in my bag, and so I was performing the delicate operation of replacing the old AA battery with the new AA battery.
Yeah.
And the insertion was successful.
Yes.
And now we simply have to reset the time and place the clock in where it's supposed to be. So, but we do have people calling on the phone. So let's just jump in here right now and say good morning. Good morning. You're on Talkback this morning with Walt Kero. Can I get your first name, please?
Sure. My name is Rick.
Hey, Rick. How you doing?
Rick.
Hey, Rick. You're on with Walt. Go ahead, please, sir.
Yeah, I love it when Walt comes on. I learn a lot of stuff. Say, I got a question about ESAs and tax deductibility. I have two granddaughters, and am I allowed a $3,000 reduction for each granddaughter, or just a $3,000 total?
Okay. If you're married, you could do $6,000. You're talking about Montana educational savings accounts,
right?
Yeah.
Right.
Yeah, it's basically it's in the form of a 529 plan that's qualified, or similar, and you're allowed $3,000 per year, and if you're married, then it's 3,000 times 2. So it doesn't matter how many kids you have; it's just that's what you're allowed to deduct.
Right now, my daughter and her husband. They were in consultation there, and they were wondering if I take the $6,000 deduction, can they also take a $6,000 deduction if they add, their money to an ESA account for their daughters?
I don't see any reason why they couldn't.
Okay, all right, that's all I need to know. Thank you very much.
Hey, good luck out there, Rick.
And thank you for what you're doing for your grandkids. Trust me, they will thank you.
Okay, you betcha. I know I did it for my daughters, and they never had any expenses when they went to college because we started saving right when they were babies.
Good for you.
Yeah. Well, good. And then they made it all the way through, so they didn't squander it. Good.
Yeah. Right. Well, of course, we had a pretty good deal. We lived in Alaska, and we got that permanent fund dividend, and we didn't use it for anything else but education savings accounts.
What a wonderful thing to do. Yeah, my brother was in Ketchikan for a number of years, and he got the dividend too. So, yeah, it's a good thing.
Yep, it is.
Rick, thank you for the call, and congratulations being a good dad and a good grandfather.
Okay, you bet.
Yeah, and happy Thanksgiving.
Yeah. Have a happy
You
Thanksgiving.
too.
Take care, buddy. All right, thanks for the call. All right, so there you go. That's a good start.
Wonderful start.
All right, now I've got my eye on the phone, and you have your eye on your stack of stuff there. So,
yeah. Okay.
What would you like to share with us first?
Right out of the chute, and there's been a lot of discussion of this, but there's still a lot of people out there in the public that have LLCs and small businesses, and they don't. It's like they've had their head stuck in the ground.
If you don't mind me doing this, ding, 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 ding. This is very, very important what Walt's about to say. And don't shrug it off thinking that doesn't apply to me just because, well, all I have is a small little daycare. Go ahead.
Yeah, it's the Financial Crimes Enforcement Network. The acronym is FinCEN, F-I-N-C-E-N. And they have a reporting form that has to be filed for existing businesses as of December 31st. So we got about a month left. Now, here's the important thing. The FinCEN, the Financial Crimes Enforcement Network, estimates there's 32 million of these forms to be filed. As of about a month ago, only 6 million had been formed.
Are you serious? Wow.
Yeah, so there's 80% out there. So, I don't think this reporting requirement's going to go away. They may, at the last minute, flip out an extension, but I wouldn't count on it.
Let's put it this way. I think this is a very, very clever way to reduce the federal deficit. Because if you have only 6 out of 32 million, and how much per day is it, or per week or month?
Hundreds of dollars per day, up to $10,000, and that's per entity. So if you've got, I have several clients that have multiple LLCs, and so every LLC that is registered with the Secretary of State, whether it's single member or multiple member, doesn't matter. They want to know about you because they're after the ownership information.
Well, now, you're really good at this whole math in your head thing. So imagine if nobody between now and then registers, right?
Yeah.
And we have how many? 32 million?
Yeah, that would be 20, well, let's just say 25 million.
Okay, 25 million entities.
Yeah.
X amount of dollars per week or month or whatever.
Oh, 10,000.
Okay.
$10,000 by 25 million. It's a big number.
That's a big number.
Yeah. Yeah.
That's almost enough to keep us in coffee around
Well, it
here.
might pay the interest for a day.
Yeah, exactly. Exactly. And we don't mean to make light of this. This is really, really important.
Yeah. And I have clients that say they talk to other people and they're, because have you filed yet? Oh, no, yada, yada, yada. And then all of a sudden they weren't aware. A lot of people are not aware of this.
Now, what is the agency that's involved with this? Is it the IRS or is it another agency?
It's a different agency.
Okay.
And those folks, this agency, the Financial Crimes Enforcement Network, came out in the early 2000s, and its job was to monitor foreign bank accounts and foreign financial assets.
Right.
Because of all the shenanigans that were going on with Swiss and Luxembourg type bank accounts and investment accounts. So anyway, they closed that loophole, but then Congress passed the Corporate Transparency Act in 2021, and they're just now getting it implemented. So, a word of warning.
So if you're thinking that, well, it's not that big a deal. I'll get to it when I can. We got a vacation plan, got Christmas coming up, so many things on my plate. I just don't have time to deal with this. There, it is. Now, how will this work? Let's say I have an entity that I haven't registered. Will I be contacted immediately, or would I be sent a bill for the first month or 2 months or whatever?
I don't know how rapid FinCEN will be.
Right.
But my experience with them is they're just as nasty to deal with as the IRS.
They have no sense of humor.
Right. Yeah. Well, they've got a checklist, and if you don't comply with what's on the checklist, well, you're toast.
Right. It might be interesting. We're up against another break here, but if you go to your regular grocery store or small business or whatever, it might be a good idea to put your arm around the shoulders. And by the way, have you done this yet?
Yeah.
Because if they don't, then their business is going to be in trouble.
Well, it's just how valuable is $10,000 to you?
Right.
Well, most people want to avoid that kind of a bill.
Yeah. Well, anyway, the phone lines are open if you have a question or a comment for Walt Kero. He's our resident CPA. And if you have a tax question, we would love to hear from you this morning, whether it's the FinCEN thing or anything to do with your small business, your hobby business, whatever it might be, whatever that involves taxes. Give us a call, 721-1290 or 1-800-568-5309. We're coming right back.
As colder weather...
With KGRZ Sports, I'm Ace Sauerwein with the Daily Update, brought to you by Republic Services. Not a great day on Saturday for the Montana Grizzlies. The football team drops the Brawl of the Wild convincingly, 34-11. The Cats are 12-0 and number 1 in the country after North Dakota State lost over the weekend as well. The only touchdown of the day belongs to Eli Gilman. He had 10 carries, 35 yards, and a rushing score. The Grizz finished the regular season 8-4, but they're not done yet. Montana was ranked number 13 by the FCS Playoff Committee in the upcoming FCS playoffs. The Grizzlies will welcome in Tennessee State for a first-round matchup this Saturday at 8:15. Pre-game show goes live at 6 o'clock on Newstalk KGVO. Fun fact about Tennessee State, their head coach is Eddie George, former NFL Pro Bowler. And finally, Grizzly men's basketball, they scored a win last night at home over the Denver Pioneers, 83-73. Joe Pridgeon was the leading scorer. That's a look at sports. I'm Ace.
We are back. This is Talkback. Phone lines are open. Walt Kero joining us here in the studio this morning, our resident CPA from Kero, Byington and Associates. And
yes.
So you have your stack of stuff. We would much rather, although you put a great deal of time in your stack of stuff, I know you'd much rather be talking with people helping to solve tax problems. But what else you got there?
Yeah, here's one, and we discussed this off air. Over the years, one of the pet peeves that I run into, and it's not a peeve, it's just an unfortunate set of circumstances, is families and people out there will put appreciating assets inside of a taxable C corporation. The usual suspect is real estate. People will have what they call a family real estate operation. From a tax perspective, that is one of the worst things you can do. And the reason, as I explained to Peter, is the double tax problem with taxable C corporations, as they're called. And an S corporation holding real estate isn't as bad, but it still has some headaches with it. The best way to own real estate or an asset that appreciates, like some patents and some other types of assets, is a partnership, an LLC, whatnot. Because corporations create what's called a double tax. As the corporation operates and pays tax on its income, that's the first layer. If they distribute that income out in the form of distributions or dividends to shareholders, the shareholders get to pay a tax. And so as Patton said when he was in Sicily at Messina, they were told him, "You're supposed to go back." And he said, "Nah, I don't like paying twice for the same real estate." And so it's that concept. So, help. Just people avoid that if you can.
You bet. We do have a caller on the line. This is Jim. Jim, good morning. You're on with Walt Kero. Go ahead, please.
Hi, Jim.
Good morning, Walt. Thank you for your service, for taking the time to help us in the public.
Bet.
Looking to sell 1/2 interest in my personal home to my significant other.
Uh-huh.
The sale price would be approximately $300,000 for that 1/2 ownership.
Yeah.
And I'm wondering, looking at the capital gains requirements, looks like I would be well below the threshold for capital gains tax.
Yeah.
Are there any other tax penalties or concerns that I should be looking at?
Well, no, not that I can think of right offhand, because let me see. How much did you pay for the property, and when did you buy it?
I bought it for $190,000 7 years ago.
Okay, so 2017?
Yes.
Okay, so if you're selling half of it, we would take half of 190,000, that's 95, and you would subtract from 95 from 300. So you would have a $215,000 gain, and because you're single, you can exclude up to $250,000 of gain on the sale of a residence. So I think you're going to be in pretty good shape there. I'm just wondering if you're only selling half of it. If I, and I don't know this answer right off the top of my head, you might be required, since you're only selling half the residence, to take half of the exclusion, or $125,000. So you could end up with a taxable event there. Anyway, I would have to study that to make sure that you're in the clear. You understand what I'm saying, Jim?
Yes, I do. Yes.
Yeah.
Okay.
And so, you don't have to rush into this, do you?
No.
Which is a good thing.
Now, Jim, did you want to get it taken care of before the end of the year for tax purposes, or you?
That's our goal.
Yeah.
Yes.
Well,
it wasn't so much for tax purposes. It was just that was our goal to make this happen this year. Right.
Yeah. Now, the significant other things, I'm just going to assume that your life partners are not married.
Correct.
Yeah. Okay. Because if you were married, we wouldn't even need to talk. But.
Yes.
But let me think. I'll have to do some research. It's a great question. I've never had it posed to me before. And there are so many nuances. What should I say? Nuances. Permutations of what can happen out there. It's just unbelievable. And it gets even wilder if you rented the property for a short while or had an office in the home. It just gets crazy complicated.
In non-accountant, that would be stuff.
Yeah. Yeah.
Yes, exactly.
Yeah, and I don't want to steer you wrong. So before I just say, "Oh, it's okay," no, I want to check out the split on that, and I think it would make sense that the IRS would look at splitting your gain because you're only selling half the house.
Should Jim contact you maybe later or sometime?
Yeah.
Okay. I will do so.
Yeah, and after I leave the show today, I'm on my way to see grandkids in Lacey, Washington, near Olympia. So I'll get to it next week. But reach me at 406-549-2288, and Serena will be happy to accommodate you, Jim, and I'll let her know.
Okay, I will do so.
Okay.
I appreciate that.
Hey, no
Have
problem,
a wonderful
Jim.
Thanksgiving, and you should travel safe.
Yeah, you bet. Will do.
Thanks for the call, Jim. Appreciate it. And we are up against another break. All of our phone lines are open, by the way. If you have a question or a comment for Walt Kero, a resident CPA from Kero, Byington and Associates, he's got the tax answers for you. If he doesn't have them, he'll get them.
Yeah.
So if you have a question, the phone lines are all free now. So let's load them up. 721-1290 is our number. Heck, it's almost Thanksgiving. So give us a call. End of the year stuff. If you've got questions about end of the year stuff, now is the time to do it. We'll be right back after this quick timeout.
Dennis Bragg with your updated weather. Mostly cloudy through Monday with highs not clearing 40 degrees as we experience fairly typical Thanksgiving week weather here in western Montana. A cold and even sub-zero weather is staying east of the divide. Still, Tuesday morning temperatures will be into the 20s with a possibility of half an inch of snow in the valleys. That threat of snow showers Tuesday morning gives way to rain and snow in the afternoon as we top out near 40 degrees. Staying cloudy and colder Wednesday into Thanksgiving with a chance of light snow showers, especially on Wednesday night.
We are back. This is Talkback. 721-1290 is our number. Peter Christian here. Nick is off today, as he is every Monday for at least another couple of weeks, taking his designated time off seriously, as he should. So it's just you and me and Walt Kero, our resident CPA from Kero, Byington and Associates. And I believe, there we go. I believe Jeannie's on the line. Jeannie, good morning. You're on Talkback with Walt. Go ahead, please.
Hi, Jeannie.
Hello, Jeannie. Are you there?
I am. Okay. I was making my coffee, so I'm hardly awake here. I heard all this stuff about having to file. I have 3 family members with LLCs, and my landlord has an LLC.
Ah,
yeah.
So can you tell me I understood what you were saying, but I need the details of what it's called and where they file.
Okay, if you misspell the word boy with an I instead of a Y, that's the name of the form, and it stands for beneficial ownership interest. And the purpose the purpose of the form is to inform the U.S. federal government who owns what, because Congress received a bunch of information from some federal agency that there were some shenanigans going out there where straw men, or in the old days I used to call it shills, would own U.S. business interests, and they were nefarious people from overseas or even nefarious people from inside the U.S. But they hide their ownership by having a front person own the membership interests in LLCs, small business corporations, partnerships, S corporations, you name it. So Congress put in place the law in 2021, and it's just now being implemented. So the purpose of the form is to inform the government who owns you, and you're supposed to do that. Now, how they monitor it is that every state has a Secretary of State, and that person registers all these businesses. And so they have an existing database of who should be filing. So, yeah, anybody with an LLC, if it's registered with the Secretary of State, and most are, because you want to keep your legal protection. And one way of doing that is making sure you're prim and proper and cross your T's and dot your I's.
Is there a cost to do this?
Well, because we're not a law firm, we're a CPA firm, we decided not to take on that risk.
Right.
But we have partnered up with a firm in Colorado. So, and they're charging $250 per. And some places are charging $500-$600 per.
Is it something that we can do ourselves, though?
Yeah, you can do it yourself, and it's an online filing. But there's some nuances and some tricks that sometimes, there'll be a hiccup. But anyway, Jeannie, does that answer your question?
Yes and no.
Okay.
Trying to explain this to someone else is going to be a little difficult. So, do they go online to the Secretary of State to find this BOI file?
No, go online. You have to file it online. But I would start just by typing BOI, and I bet that'll get you to FinCEN. And then, and FinCEN stands for Financial Crimes Enforcement Network, and it's a government agency. I don't know if it's part of the Securities and Exchange Commission, but it's.
Just so you know, Jeannie, I just Googled BOI, and it says BOIR e-filing system. It says BOI registration, and it says the filing supports the electronic filing of the beneficial ownership information report. And so if you go there, and there's a needs support button, there's an additional resource button. So it's very, very, it looks like it's very easy to follow along.
Okay. You do understand. I'm trying to explain this to 4 business owners, and they're going to go, who do you think you are? Right. So I hope I can convey everything you've said to me so that these people will listen. $10,000 fine is enormous to me, so I'm going to try to save these people $40,000 by calling them all.
Yeah. I mean,
so can they call you if they're confused? Can they call you, Walt?
It depends on what they call me.
Yeah. Now, if you don't mind, I'm just going to read you a couple little bullet points from this website. Is that okay, Jeannie?
Okay. I have a pen in hand here, so I'm writing this stuff down.
There you go. It says important information about BOIR registration. Enforced by the Financial Crimes Enforcement Network, FinCEN, as Walt said, required for most businesses unless it qualifies for one of the CTA's exemptions. Another bullet point, businesses formed in 2024 must file within 90 days of forming, and the deadline for businesses formed prior is January 1st. So this coming January 1st, 2025 is the deadline.
Yeah.
If you don't do it by then you are in violation, right? And it says failure to file.
Okay.
Now, this is the important one, so listen closely.
Yeah.
Failure to file can result in a fine per day of, I know come up with this number, $591 per day, up to $10,000 total.
Okay, I will emphasize this to these people.
Please do. Please
They're
do.
going to go, where did you hear this? They're going to go, where did you hear this? And I'm going to go on the radio, and they're going to slough me off, like, oh, my God, you just heard something. So I'm trying to get all my ducks in a row so I can make them really pay attention that I'm telling them something that's authentic. So I'm going to name both you gentlemen when I tell them this stuff.
Well, now, Jeannie, one of my favorite sayings of all time, 3 words: knowledge is power. Okay, if you know about this and you do it, you're great. If you know about it and you don't do anything about it, you're responsible for that knowledge.
Mm-hmm.
Well, you happen to know personally one of the people that I'm going to be telling this, so I will tell him. If you don't believe me, you can call Peter.
Yeah, and Jeannie, we'd love to help you, but I'm going to be gone this week, and so I don't want a bunch of phone calls to my office when I'm not there. So next week, if people are still have questions, if I can help them, I will.
But I will tell you, if you just go to, I'm sure you're probably on your computer right now. If you just type in BOI registration comes right up.
I'm too old for that. I'm sitting here with my Sharpie.
Okay.
So I'm writing this.
That's fine.
If I can read it on a piece of paper.
Yeah. If you go to you go to the library, they use the computer for free there. Just type in BOI, boy, Oscar, idiot. I don't know. BOI. Then it'll pop right up. Should give you all the information you need, and then you can contact Walt or whomever to help you get it done.
Yeah, I think I'm the 4 people, $10,000. I'm saving $40,000 to these people. These 4 people. So I'm going to tell them I want a finder's fee.
Yeah.
Keep them out of trouble.
Yeah, I want you and those 4 people to have a Merry Christmas and not a Scrooge to have to pay $10,000.
Or if you're really clever, okay, you can charge them $591 for the information.
Yeah, per day.
Yeah, then I'll have my own LLC that I'll have to file one.
I hear that. Jeannie, listen, thanks.
Yeah, and Jeannie, one other thing, there's no problem once you file the form, but you have to be aware that if you have a change of ownership, and Jeff, who calls in, had this issue with it, is if there's a change of ownership, you got to refile.
Oh, that's interesting. Okay.
Yep. Okay.
I'll try to remember to throw that one in.
Thank you for the call.
Okay.
There you go. Appreciate it, ma'am. You bet. Thank you. We're a little bit past a break, but the aforementioned Jeff is on the phone. So we're going to get Jeff's call when we come back. Hopefully yours as well. Walt, Kero joining us here in the studio this morning. We've been talking about FinCEN and BOI and all that good stuff, and I don't mean Boy Scouts.
No.
Give us a call. We can talk about whatever you want tax-wise. That's why Walt is here. We'll be right back.
My name is Teresa Barber. I was in the United States Navy, and I served overseas in the Middle East and Africa. Early on in my career, I had a commander that taught our suicide prevention training, and the very next day, he took his own life. 90% of suicide attempts involving a gun are fatal. My way of continuing my service is to help protect my community by being a responsible gun owner and by storing firearms safely. Store all your guns securely. Help stop suicide.
Brought to you by End Family Fire and the Ad Council.
This is your captain. We are going to be experiencing some slight turbulence. Please fasten your... Oh, hold on. Just got a video of my cat.
Imagine the pilot of an airplane was as confident as you are texting and driving. Seems kind of crazy when you put it like that.
Visit StopTextStopWrecks.org. A message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
Okay, we are back. This is Talkback. 721-1290 is our number, 1-800-568-5309. Walt, Kero, our resident CPA, joining us here in the studio. We've been pretty much wrapped up with this whole BOI thing, and it's very, very important. But Jeff is on the line, so let's not waste another second. Jeff, good morning. You're on Talkback with Walt. Go ahead, please.
Hi, Jeff.
Hey, good morning, Jen. Good morning, Walt. Good morning, Montana. I don't remember talking about change of ownership, so it might have been your other listener, Jeff.
I thought you mentioned it because your HOA, and people buy and sell real estate, you have different members coming into the HOA. Anyway, doesn't matter.
I may have actually for our board. Yeah, our board actually changes, and so I guess maybe it was me, and my memory just isn't as good as it used to be. Two things for Jeannie, though. First of all, BOI. I mean, I'm glad you sent her to that page, but the home page is fincen.gov. FINCEN.gov.
Oh, thank you. Yeah, thank you.
And you right in about the middle of the page in my browser, there's a File Your Report Now button there, but it gives you all the background on it, and beneficial ownership information, money services business information, e-filing, statistics, all sorts of different things. So I think it might just be beneficial for her if she's trying to convince them, rather than send them to a form they've got to fill out, to actually go to the homepage and see exactly what the problem is.
Very good advice.
Yeah.
Yeah. Mm-hmm. And I have been in touch with Montana Secretary of State. Or I sent them an email. I still haven't gotten anything back on them. I wanted to get a determination from them about HOAs if we are considered not charitable organizations, but organizations that have no responsibility for filing. I'm still waiting on Secretary of State for that.
Yeah.
Finally, go ahead.
Oh, in my humble opinion, I think you're screwed, glued, and tattooed on that. Because in order to get the charitable exempt status, or not charitable, but tax exempt status, you kind of have to apply from that at the beginning when it was formed, or sometime after that. So if you don't have a 501c4 or 6 or 7 designation, I don't think you're exempt. But that's just my humble opinion.
Well, we don't have that. We do have. Let's see. We registered as a domestic nonprofit mutual benefit corporation, so that's what I want to have. On from there.
Okay. But somewhere in the fine line in FinCEN, they may say if you want to get this exemption, you need to have this 501c6, 7, whatever status. And so that would require an application for that status, and then also filing a 990 every year.
Right. So we shall see.
I hope the best for you, because I think this is a kind of onerous. I mean, good God, I doubt you have any Chinese bad guys being owners of, in fact, owners of real estate in your HOA, but they want to know.
No, but I do have a naturalized Chinese granddaughter who lives with us, so maybe that puts me on the government
crosshairs.
Radar,
Yeah, you're on the the crosshairs are on you.
Yeah, I'm one of those suspicious folks doing some money laundering. Real quick, too, Jim called.
Yeah.
Excuse me. And he was talking about splitting his home ownership with a significant other to whom he's not married.
Yeah.
And I know that your mentor and mine, Dave Ramsey, talks about the risks of doing that.
Yep.
And he talks about a couples that own a home together, buy a home together, and then they split up. Mm-hmm. And now you own a half a home with an ex.
Yeah.
That's
War of the Roses.
I don't know how long they've... Yeah. And then here's another problem, that you're married to this partner and the partner dies, and their kids or their parents or somebody outside of the relationship now owns half of your house.
Mm-hmm.
And if you want to sell it, you have to get their permission, and it just becomes a nasty mess.
Yes. Mm-hmm. Yeah.
So it's, and then you can do things with wills, but contracts beat wills. So say she has a will and she says, well, I'm going to leave it all to you. That doesn't matter. It depends on what contract says, depends on what the deed says.
Mm-hmm.
And, it just gets really messy really quickly when you're not married. And so I just want to make sure Jim knew that this is not a quick fix, be all end all for people who aren't married. Yeah, we'll just own the home together. The laws around marriage are there for a reason. They protect people in the event that marriages want to dissolve. And it's unfortunate, but I wouldn't want to have to be in the shoes of having a relationship come apart or a partner dies, and all of a sudden my whole financial world goes to the sewer because I don't know what's going on. There's all sorts of things happening that I didn't plan for.
Jeff, good points. Thanks for the call, sir. We appreciate it.
Yeah,
right.
thanks.
We're up against a break. We have Catherine and more calls coming in for Walt Kero, and that's what it's all about. He's going to be here till 10 o'clock. We'll be right back in just a moment. Some phones starting to light up a little bit for Walt Kero of Kero Byington and Associates, and I do believe we have Catherine on the line. So, hi, Catherine. You're on Talk Back with Walt. Go ahead, please.
Hi, Catherine.
Yeah. Hi. I just, because of what Jeff was talking about, I just wanted to bring this up. I'm reading this article by the Manhattan Contrarian, and I can send it to you if you want. It does say that condos and homeowners associations will be forced to register as directors and members, even though they do not distribute dividends and can't be sold for the profit of members. So they do need to be registered. So just thought I'd bring that up. Or it's basically everybody is going to have to register.
Yeah. That's the default.
It's stupid as all get out. And the thing is that when it first came up during the Trump first administration, he vetoed it, but then it was attached to the Defense Appropriations Act. So in 2020.
Mm-hmm.
So anyway, there we go. All right, that's all I've got.
Thanks for the call.
Oh, thanks, Catherine. Appreciate it.
All right.
There you go. All right, we have time to take one more call. This is, let's see, this is Cheryl. Cheryl, you're on with Walt. Go ahead, please.
Hi, Cheryl.
Great. Thank you. Good morning. With this BOI situation, I registered an S corporation back in 2004, and it became inactive in 2016. I didn't file any annual reports after that.
Right.
I didn't actually dissolve the corporation with the paperwork with the Secretary of State.
Yeah.
Is this something, I'm assuming that I still need to file this BOI?
Well, I'm glad you called because I have a client with the exact same situation, almost verbatim, because, I shouldn't say that. This entity was formed in like 1976, but it stopped doing business in 2004. And this client of mine, his first name is Pat, very nice gentleman, and he asked me, do I file? And I looked at it, and I said, well, let me check it out. And when I checked it out, a dormant business entity can be exempt if there's a checklist on the form, instructions for the BOI form. And if you meet all those, I think there's 5 or 6 items on that checklist, then you're exempt from having to file. But you can't have business assets, not even a bank account. And you have to have that status for at least 5 years prior to 2024. So the answer is yes, Cheryl, that if you qualify, then you're exempt. But I would go to the form and look at the form instructions and the checklist. And if you meet all those items, you're good to go. Now, the thing is I thought you should file a form to say that you are exempt, but they don't make any provision for that. So anyway, if you meet the exemption, then I would just document that you meet the exemption and keep it in your files, because I bet dollars to donuts one of these days they'll come a-looking for you.
Oh, I'm sure. Now, does filing like a dissolution or anything, does that have anything to do with it? I mean, we have a business with that company. There's no bank accounts. There's no assets. There's nothing.
Yeah, you just file with the Secretary of State to keep your name. And a lot of people do that. I would, just because this is such a hassle, I would just dissolve the entity with the Secretary of State. But because you were registered on January 1st, 2024, you are in the crosshairs. So I would file the form. But if you're exempt, you don't need to worry.
Okay. And I'll get that information off this BOI form that I'm actually calling up as if I'm going to register, but there'll be a checklist there?
Yeah, it's in the instructions for the form. And there's about 5-6 pages of instructions.
Okay, great.
And it might be a good idea to follow Jeff's advice and go to finsend.gov, because that's the official government website, and he was very smart to share that with us.
Great. Okay, I'll do that. I have another question. I know this is kind of...
Now, we only have about 30 seconds, so do you want to hold?
You know what? Go ahead and go. No, go ahead and go. That's fine. Okay. No problem. You guys have a great day.
Thanks.
Oh, thanks, Cheryl.
Call us back in the next hour if you have time.
Yeah.
Walt's going to be here till 10. That's what it's all about. Yeah, Walt Kero joining us here in the studio this morning. And by the way, in case you want to get in the queue for the next hour, give us a call right now at 721-1290, 1-800-568-5309. Walt Kero Byington and Associates, our resident CPA. Yeah. We appreciate him being willing to give us lots of general tax advice, and he does it a couple times a month. So we're going to come right back after the top of the hour. Have another hour with Walt.
This is Talkback, 721-1290 or 1-800-568-5309.
This is Newstalk KGVO, AM 1290 and 98.3 FM. KGVO, Missoula's news and weather station.
Hey, welcome back, everybody. It's hour number 2 of Talkback for this Monday, November 25th. Talkback this morning, brought to you by 123 Seamless Gutters, family owned and operated. Give them a call today at 406-240-2669. They are protecting the foundation of your future. Also brought to you by Harrington Surgical Supply. Appointments preferred for mastectomy fittings and custom compressions. Walk-ins, though, are always welcome. Y West Storage out at the Y on Two Smokes Way. Give them a call for storage at 406-510-0590. They're making room for you. And Phillips Janitorial. If you have a business or a home or both that need cleaning, let them do it all. No job too big or small. For Phillips, 406-260-6617.
The views and opinions expressed on Talkback are not those of the staff, management, or advertisers.
All right, Peter Christian here. Nick has the day off today. He's taking Mondays off for a while, and so it's just you and me and a guy named Walt.
Yes. We're here.
Walt Kero, our resident CPA from Kero Byington and Associates, here to offer you and provide for you free general tax advice. We've been talking a lot about this whole BOI FinCEN thing.
Yes.
And I just wanted to read something to you here. And I know you and I were chuckling about this a little bit, but it's not funny. But anyway, it says FinCEN is providing beneficial ownership information reporting relief to victims of recent natural disasters. FinCEN has announced that certain victims of Hurricanes Milton, Helene, Debbie, Beryl, and Francine will receive an additional 6 months to submit their beneficial ownership information. So
yes,
that's good to know.
Yeah, and as you said, the floods wiped out the assets of the beneficial ownership interest. But Congress doesn't care. They want to know who owns nothing.
Well, whatever. Let's just be positive and say thank you for.
Can I have another?
Thank you for giving us an extra 6 months. Yeah, to find our business. Anyway, 721-1290 is our number. 1-800-568-5309. Okay, in lieu of calls, the phone lines are totally free. If you have a question or a comment, be first in line to get your advice from Walt. So what else do you have in the stack of stuff there?
Oh, well, this is just the tip of the iceberg. Like I said, there's been so much stuff building up, and thank God I've got another show in about a week.
Right.
But there are 6 tax planning strategies that you, in the listener audience, and taxpayers can employ for this fall to maximize your tax savings. So I want to go over those, and I'll be hopefully recording an ad with Christy here after the show in regards to these 6 items. Mm-hmm. The first one, and we've talked about this before, but one of them is donate, if you're going to be charitable between now and the end of the year, donate appreciated securities. And I know, Peter, you bought low and can sell high on all that Tesla stock you bought.
Sorry, yeah, we're laughing uproariously in the studio here.
But in lieu of selling that stock, you can donate it to your favorite charity. And the benefit of it, you avoid the capital gain that's inherent in that Tesla stock you own, Peter, and you get the market value of the stock, of that Tesla stock, on the day you give it. Mm-hmm. Now, it's the average of the stock on the day, because it trades up and down. Right. The price goes up and down during the day.
And I follow it so closely.
Yeah, that's right. But anyway, that is a huge benefit. And I have quite a few clients that take advantage of it, and it just works really swell. You avoid the capital gain, and you get a charitable donation deduction. And is just a very good technique to employ. And you can do that pretty much easily between now and the end of the year.
Okay, so there's another good piece of advice. So I know you have a bunch, but the phone lines are all open. If you have an actual tax question for Walt, we want to hear it because he's here for another hour to answer your questions today. So 721-1290. Go ahead.
But I'm glad the audience is listening.
Yes,
and giving me a chance to bring these up. Number 2 of 6 is you can also make charitable contributions from your IRA. If you have, upon reaching age 73, like moi, you can make a donation directly from your IRA to a charity. And so you don't get the money from the IRA. It goes directly from the IRA to the charity. And at last count, you can do up to $100,000 a year. And that works really well. Oh, okay. For 2024, it's $105,000 because that keeps changing from year to year. But the good thing about that is you don't get the charitable donation deduction. But the better thing is it comes out of your IRA tax-free. You don't get the deduction, but your distribution that goes to charity is not taxable. So it's a better form of deduction.
We have a minute before we get to our next break, so let's get number 3 there real quick.
Okay, number 3, also with IRAs, and I do this. And this lady that wrote this article, God bless her, this is exactly what I do, is I take almost all of my minimum distribution and split that up between the federal government and the state of Montana for withholding. And instead of making estimated tax payments, I just pay my estimates from my minimum distribution from the IRA. And that works really slick. That's treated as having been paid equally throughout the year.
Right.
And
you don't have to write a separate check.
Don't have to write another check. And most people, including my dearly departed mother, hated making estimated payments. I don't know of anybody that does.
I'm not terribly fond of it.
Do you
either.
like making them?
No, I don't. but luckily I have a lovely, loving wife who says, "Did you make your estimated payment yet?" So anyway, we're up against a break. We're going to come right back. We have Adam who's waiting to visit with you when we come back from the break, and we have about 5 or 6 other lines open for Walt Kero, our resident CPA from Kero Byington and Associates. If you have a general tax question, give us a call. We'll get it answered for you as best we can right after this.
Call 123-SEAMLESS.
Dennis Bragg with your updated weather. Mostly cloudy through Monday with highs not clearing 40 degrees as we experience fairly typical Thanksgiving week weather here in western Montana. The cold and even sub-zero weather is staying east of the divide. Still, Tuesday morning temperatures will be into the 20s with a possibility of half an inch of snow in the valleys. That threat of snow showers Tuesday morning gives way to rain and snow in the afternoon as we top out near 40 degrees. Staying cloudy and colder Wednesday into Thanksgiving with a chance of light snow showers, especially on Wednesday night.
All right, we are back on Talkback. Walt Kero, our resident CPA from Kero Byington and Associates here in the studio with us. And Adam's on the line. Adam, good morning, sir. You're on with Walt. Go ahead, please.
Hi, Adam.
Hey, Walt. Good morning, guys. Hey, I hope you're having a good morning, Monday morning. I'm hard at work here today. I'm hard at work today, and the reason why I'm saying that is I quit my job and started a handyman business this year. I don't plan to make over 50, 60 grand a year, just keeping the workflow low. But my question is, I didn't know which way to file with the state, but I've always been told, you should do an LLC because it protects you. But for tax reasons, what would have been the best way for me to file the business with the state?
Oh, okay. If you're an active business, my personal preference is I like subchapter S corporations, and there's a reason for that, and it has to do with pulling the money out of the business. You're supposed to take a reasonable salary, and then the rest comes out to you as a distribution of the profits. And that's the way my CPA firm is set up. And we try to have our salaries be similar to what we pull out of the company on like about the same amount. So, but an LLC, I need to know, are you the only member of the LLC?
Yeah, because honestly, I don't know how to hire somebody. If I could, I would.
Yeah.
But yes, as of right now, it's just me swinging the hammer. Yep.
Sure. Okay. If it's just you, then the IRS treats a single member LLC as, hang on to your hat, this is a wild word, a disregarded entity. So for tax purposes, your entity, your LLC, is disregarded. And so you just report your income and your business on what you would do if you were a sole proprietor, not an LLC. Hence the term disregarded. So that's a good thing. That's a good thing. Now, the reason why you were advised to do an LLC is for protection. That's a legal issue of protection from creditors for your non-LLC assets. So if you have a house or real estate, in theory, those assets are safe from liability in case you swung a hammer and hit somebody. So,
right? So, yeah, I got you there. Yeah, that's what all my buddies, because all my friends are self-employed, and that's kind of why I jumped on that wagon. So I knew that part. I knew that it would protect me legally in court. I was just worrying about the tax side. But my next question is and it's a real quick one. Like I said, I don't plan on making over 60 grand. I'm sure I could get over 100 if I wanted to, but I don't want to. I just want to keep it simple.
Yeah.
And I told my accountant, who's a great guy.
Yeah.
I said, hey, look, every time I get paid by a customer, I take 25% of that and I put it in a separate account. Is that going to be enough for me to cover the taxes for the business?
Well, let's start with an understanding of what you mean you're going to make $60,000 a year. Is that gross or is that net after your expenses?
That's me taking home. I'm bringing home 60 grand. I'm not even close to that. I started the business in July, and I've only made like 5 or 6 grand because I've been going on vacation with my wife and stuff.
Yeah.
But next year, when I hit it hard, so I want to take home what I was making at my last job because we live comfortably.
Right.
So that's what I'm saying. So with 25% of every check that a customer sends me, hypothetically, they send me a $100 check, is $25 enough to cover the taxes on that $100?
Well, if you and your lovely bride don't make more than like $100,000.
Oh yeah, we won't.
But if you're in that, you're going to be in about a 12% federal income tax bracket. But you got to pay self-employment tax on that net, and that's another 15%. So 25% is about right in those circumstances. And then I would also add another 5% for Montana. So I would do 30% in your facts and circumstances.
Nice. Excellent. So one last thing. It's not a question. It's a request. Tell me one thing that nobody seems to know about taxes when it comes to small business.
Oh, well.
Anything?
Well.
You know, when you sit there and you go, how come nobody knows about this? What's that one thing I need to know?
Oh, I'm glad you bring it up because it's also something I just found out in the past 2 or 3 weeks. If you use anything that is an Intuit program, whether it's QuickBooks, TurboTax, or whatnot, be careful. And the reason to be careful is Intuit is building a huge database of all the information they get from all their customers for QuickBooks and TurboTax and whatnot. They also, there's a program called Lacert that tax preparers use by, that too is owned by Intuit. So anybody who has business income or financial information or personal information, and it goes into an Intuit program. They're building a huge database. You'd think they're the Chinese government or something, but
I got you.
But you have to be careful, and go into that with your eyes wide open. And I know QuickBooks is popular; gazillions of people use it, but you need to know that issue.
Yeah. All right. Well, listen, Walt, I'll let you go for the other callers, man. I really appreciate the advice.
Yeah. Hey, good question.
Adam, do me a favor. Stay on the line for a second, okay?
I sure will.
We're up against a break. We're going to come right back. We also have Cheryl, who's back with another question for you. And
good.
Several other phone lines open. If you have a question for Walt Kero, give us a call, 721-1290, 1-800-568-5309. We're coming right back after this timeout.
Montana State News Network.
I'm Dennis Bragg. A bus driver had to be treated for smoke inhalation, but no students were hurt after a bus used to transport a high school debate team burst into flames in the Mission Valley. The Whitefish Pilot reports a passerby noticed the bus burning in the Ronan Middle School parking lot where it was parked after taking the Whitefish speech and debate students to a tournament. It took about 2 hours to extinguish the fire while the students were retrieved with another bus. Senator Steve Daines says he's willing to support a bill allowing the NFL's Washington Commanders to play at RFK Stadium now that there's progress in resolving the dispute over the team's former Blackfeet-inspired logo. Daines had taken his complaint to the Senate floor a couple of weeks ago.
And since then, I've received assurances that going forward, we will never see that again. I charged the team and the NFL with a very simple task. Sit down with the family of Blackie Wetzel, the man who inspired this iconic logo. Hear and listen to the Blackfeet tribe. Recognize the impact of historic leaders like Chief Two Guns Whitecalf. Find a path forward.
Daines is optimistic after discussions with the Wetzel family and the team about finally resolving that dispute. Governor Gianforte is looking to fill the top post at one of the state's most important agencies. Jason Laird reports.
Montana Fish, Wildlife and Parks is looking for a new leader. The governor's office announced last week that Director Dustin Temple will retire at the end of the year after 2 decades with the department. Governor Greg Gianforte appointed Temple to the director role last year following other leadership positions within FWP. The agency's COO, Marina Yoshioka, will take over as acting director. Reporting for the Montana State News Network, I'm Jason Laird.
Thanksgiving week is here. That means all the Black Friday spending. According to Wallet Hub, Montanans are expected to spend about $1,300 on Christmas this year. It depends on where you live, though. In Billings, the tab will be about $1,000, but as high as $1,600 in Missoula. This is the Montana State News Network.
If I could be you.
And you could be me for just 1 hour.
If you could find a way.
To get inside each other's mind.
Walk a mile in my shoes.
Walk a mile in my shoes.
Walk a mile in my shoes.
We've all felt left out. And for some, that feeling lasts more than a moment. We can change that. Learn how at belongingbeginswithus.org. Brought to you by the Ad Council.
Walk a mile in my shoes.
Here's a fun fact for you. The average chameleon can point their eyes in 2 different directions. On the other hand, the average human can't. So unless you're a chameleon, there's absolutely no way you can focus on texting and driving at the same time. So don't do it, unless you're a chameleon.
Visit StopTextsStopWrecks.org. A message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
Welcome back to Talk Back. Peter Christian here. Nick Christensen off today. He's taking a couple of well-deserved Mondays off. And so it's just you and me and Mr. Walt Kero. Walt Kero from Kero Byington and Associates. I was going to say a dog named Boo, but never mind. We do have Cheryl back on the line. Let's go ahead and get her on. And there we go. Cheryl, good morning. You're back with Walt. Go ahead, please.
Well, good
morning.
Cheryl.
I took your advice. I went on that FinCEN website to find out about what the exemptions are, whether you have to file, et cetera. And I'm finding a little conflicting information. And I'm hoping that I'm just reading it incorrectly and you can tell me which is correct. This paragraph C13 says, is a company required to report its beneficial ownership information to FinCEN if the company ceased to exist before reporting requirements went into effect on January 1st of 24. It says a company is not required to report its beneficial ownership information to FinCEN if it ceased to exist as a legal entity before January 1st of 24, meaning that it entirely completed the process of formally and irrevocably dissolving. So that would tell me if you didn't file your articles of dissolution, you are required to report. Do you read it the same way?
Well, the way you're discussing that, the answer would be yes. Yeah, that you would interpret that. I'm reading it the same way you're reading that. Now, my client's in the same shoes. I told him that, hey, Pat, why don't you you make the decision if you want to file the form or not. But fortunately or unfortunately for him, he has an LLC that we have to deal with as well. So, under those, it seems to be kind of difficult, and you say a quandary, because if you're in inactive business for 18 years, you don't have any assets. This is a question of legalities, and I'm not an attorney, but I have, at least from an income tax perspective, just recently doing some tax planning for a corporation that's selling its assets, and it qualifies for a complete liquidation, even though it's still going to exist after all the assets have been sold and distributed to the shareholders. So, anyway, there's a whole bunch of different definitions about what's what, and there's tax rules, and now there's FinCEN rules. And I think I don't know the best answer to that, Cheryl.
Well, I would think, if it specifically spells out a legal entity, meaning, you haven't filed your articles of dissolution, you're still a legal entity and you're still required to file.
Yeah.
I mean, they gave a definition.
That would be the safe way to go.
Right. Yeah. It'd be safe just to file and not worry about it, or worry less about it.
Now, it doesn't cost anything to file, correct?
No. There's no. But there's a penalty for not filing when you should. Right. And so it's cheaper.
But here's my quandary, the confusing part. Because in Section L2, it says, what are the criteria for the inactive entity? It doesn't say legal entity or illegal.
Right.
What are the criteria for the inactive entity exemption? And it says an entity qualifies for the inactive entity exemption if all 6 of the following criteria are met.
Right.
Well, the entity was in existence before January of 2020, check. The entity is not engaged in active business, check.
Yep.
The entity is not owned by a foreign person, check. The entity has not experienced any change in ownership. Check. The entity has not sent or received any funds in an amount greater than $1,000, blah, blah, blah. Check.
Yep.
And the entity does not otherwise hold any type of assets. Check. So, according to this, I don't have to file because I'm exempt under those conditions, but I haven't filed my articles of dissolution, so I am required under those rules.
Yeah, but I think those are separate rules, Cheryl, and I would rely on that you met the qualifications for exemption. Now, it doesn't say you're dissolved, but it says that your entity is exempt because you qualify. Does that make sense?
Well, it makes sense, but I'm just afraid they're going to go, well, you're picking and choosing which one you want to deal with. Well,
but if your entity is not dissolved, well, then you don't meet the criteria for the dissolved entity, but you do meet the criteria for being exempt. And that's a difference.
I get that, and it is a different deal. So I'm assuming, well, maybe I'll just not file and have them come after me and go, this is why I did it, and okay.
Yeah, document, keep your file on it, and say, here. And said, hey, I'm not an attorney. I'm just, out here in the wild blue public.
She is Jane Q. taxpayer.
Yeah.
The question I was going to ask when I was on before, if I have a second or two, is the only place, and I mean, I read a lot of news, a lot, and I have never heard of this filing requirement other than on Peter's show, ever.
Really?
I've never seen it online, never. I've never gotten anything in the mail. Now, I don't go on Facebook, and I don't do social media stuff.
Yeah.
But this is the only place in the last year I have heard of this.
Huh.
So actually, I went on, the FinCEN, and as I was going through trying to check out the things that you suggested last time, it did say, how do people find out about this or something? And I went, oh, yeah, I'd like to see that. It says, well, we get on with different radio stations and through social media, but they don't. I mean, if you're not online looking for it, and if I never listened to Peter's show, I would never have heard about this.
Yeah. Well,
it sounds kind of intentional to me. Sounds like a big money grab to me.
Yeah. Well,
I mean, if you don't tell people about it, and I mean, who's going to go looking for this if they've never heard of it?
Right. Well, Cheryl, to be honest, over the weekend I was hunting at a client's ranch up, outside of Missoula, and she said, I got this from the ag people, and nobody knows about this with LLCs. And so I said, okay, I'll put this on the radio. So, boom, that's why I'm emphasizing it, is because the client said, hey.
I certainly do appreciate you coming back on, because I heard you the last time or the time before that you were on talking about this, and I made some notes and completely spaced it. Well, and in the last couple of weeks, I've been going, man, I wish you would be back on the radio so I can ask him some questions about this. So I do appreciate you being on and talking about this. I think it's really important for people to know. I mean, like I said, I'm online a lot, reading a lot of news, and I have never heard about this except on Peter's show.
Well, I will tell you, during one of our Chamber of Commerce hours that we had the gentleman, an attorney from a very prestigious law firm in Denver, who was actually on the phone with us, who spent an entire hour explaining all this. And it was the first time we had heard about it on this show. And then when Walt brought it up again, we just keep pounding that nail, because he was quite emphatic that if you don't do this by January or by December 31st, there'll be all sorts of really bad penalties, even for the little tiny businesses. So everybody needs to find out exactly what you're doing to find out if this is something that applies to me, and you're doing your due diligence. Good for you.
Yeah.
Well, thank you. I just feel bad for all the rest of I don't know half the people that I know. Do they have a corporation? Do they have an LLC? Yeah. Obviously I would tell them about it, but you would think they have all the information about me. And they would at least send a letter to, excuse me.
Those chickens?
Chickens. Actually, that's my husband's ringtone on his phone.
I love that.
Yeah, that's great.
I love it too.
I wonder if I can get a Tarzan yell on mine.
Probably. There you go. But you would think that they would at least send to who they can. They have the information. They would at least send a notice or whatever to say, well, you did know about it. We sent you something. But no, it's been nothing but crickets.
Oh, yeah. That's too bad.
As the guy said in the movie, son, you're on your own.
Yeah. And there's nobody here but us chickens.
I just want to say, Peter and Walt, I do really, really appreciate you bringing this up yet again before the deadline.
It's our pleasure.
Okay, well,
right.
hey, thanks. Have a happy Thanksgiving.
Thanks for the call, and we are like a couple of minutes past a break, and we have two Jeffs who are waiting to visit with us on the phone. When we come back, we'll have Jeff number 1 and Jeff number 2. We're going to come right back after this timeout. Okay, we're back on Talkback. 721-1290 is our number. We have two Jeffs waiting, so let's get Jeff number 1 first. All right. Good morning, Jeff. You're on Talkback. What's on your mind, sir? Go ahead, please.
I don't know if I'm Jeff number 1 or Jeff number 2.
You are Jeff number 1, sir. Go ahead, please.
Oh, that's a change. Usually I'm Jeff number 2. I have a question. First, there are a couple questions. First, the year's coming up, and don't do anything with taxes and stuff and taking money and shifting around until after the first year because of our new president. And my next question is, I have guaranteed student loans, and those are all up in the air about what the heck's going to happen. Who knows? And right now, I'm not paying any interest. Okay, on the guaranteed student loans.
Yeah,
I have been making my monthly payment, even though it's been, I don't know why, I haven't had to do that for a couple 3 months. As far as they're concerned. And I guess the way it was before, there was interest on those, okay? That was a big chunk of it. Mm-hmm. And I was just wondering, would it behoove me to, I have a couple 8% loans, right?
Yeah.
And if I saved some money up and paid those off before it changes, or should I wait and see, or whatever? It's kind of confusing, and if you please don't. Thank you for taking my call, by the way.
Oh, no problem, Jeff 1.
Yes, number 1, Jeff. Don't hang up the phone until the next caller because I'm on Bluetooth right now, and I will miss the answer. So.
Oh yeah, well we don't want that.
Time,
okay.
Yeah, exactly. Your time's valuable, sir. Thank you.
Yeah,
I appreciate it.
Okay.
Happy Thanksgiving coming up.
Yeah. Okay. In regards to the student loans, I don't know the best way to describe that because we have a new president coming in, and he's not going to be so willy-nilly with taxpayer dollars and forgiving student loans and whatnot. So in that regard, I think it would be best to wait and see because even though the current administration wants to forgive student loan debt, I don't know if that is. I think it's too late for that to actually happen and occur. And so, but in regards to the income tax question, if you have a chance to, and this is one of the 6 items, bunch deductions, like medical and charitable and whatnot. If you're single, the standard deduction is around $15,000. If you're a married couple filing joint, it's $30,000. It's really hard nowadays to get your itemized deductions to boil over the standard deduction. So if you can bunch, in other words, put 2 years or as many deductions as possible into 1 year through payment of them, then that's an advantage. But without seeing your tax returns from last year, that's a hard one to answer. But
well, yeah, I have Social Security. I just started getting that. I'm working part-time. And, I was basically worried about when the student loans, all of a sudden they say, okay, interest is owed. I don't know if that's going to happen or not. I mean, is there any way, should I try to scrape some money up and pay off. I don't want them forgiven, but the interest is what I'm worried about, because the student loans are like, a lot of it's like, say, 30% interest.
Wow.
And it would be good to pay that off, and, the 8% loans and the interest on that type of stuff before anything happens, or should I just hold fire until after the first?
Well, if you want to, student loan debt interest is deductible, what we call above the line. And so it's not part of your standard deduction, like itemized deductions are. So there are some benefits to that. But what I would do, if I was in your shoes, I would go and talk to either there's a counselor or somebody with your existing debt to find out what your options are, and then go accordingly. Because and I do that with people who are just getting on Social Security. I say, go talk to Social Security, find out what your options are, and then make a decision. So you're going to be better served by having more information than less. And you know your current tax situation, your Social Security payment and whatnot. Who is your loan with? Your student loan with? Who's that?
Well, there's two. I have like 5 different loans through. It was I guess consolidated or whatever, but there's a couple. Like this one for $6,000, one for $4,000. They're like at 8%.
Yeah.
The other ones are like at 5% and stuff like that. So. So I guess I should talk to student loan people and the other.
Yeah,
it's so darn confusing. I apologize. It really is.
No problem, Jeff. Tell you what? Why don't you do that? And within the next week or two, I'll be on twice before the end of the year,
right.
And you get that information. Then call back, and we'll be happy to go over that.
Thank you very much, Mr. Kero, and thank you, Peter.
You bet.
You bet.
Appreciate it.
Jeff, thanks for the call.
Happy Thanksgiving to you.
Yeah, same to you.
Eat turkey. All right.
Thank you, sir. We're going to come right back. We have another Jeff, our other Jeff waiting on the line. I won't say Jeff number 2, but the other Jeff. 721-1290 is our number, 1-800-568-5309. Walt Kero here with us for another 18 minutes, and the time is flown by.
Boy, it's flown. Yeah.
You bet. We're going to come right back after this quick timeout.
Need to replace your Social Security card? In most states, you can request one online with a My Social Security account. A My Social Security account gives you secure access to your personal earnings history and benefit status. You can also get a proof of income letter, estimate and apply for benefits, and more. Save time. Go online. Open a My Social Security account at ssa.gov/myaccount. Social Security. Securing today and tomorrow.
Produced at U.S. taxpayer expense.
Welcome back to Talk Back. 721-1290 is our number. And it's been a great morning with lots of great information from Walt Kero, our resident CPA from Kero Byington and Associates, offering you general tax advice. Let's get Jeff. Our regular Jeff is back, if you don't mind.
Yeah, he's number 1 now.
Yes, he is. All right, Jeff, good morning. You're back. What's on your mind, sir?
Thank you for not referring to me as number 2.
Nobody likes to be referred to as number 2. But go ahead, please. Yeah.
Yeah. There's that old joke of watch out for number 1, don't step in number 2 either.
Got it.
Yep. So, I actually, if you go out to the Secretary of State website, it's sosmt.gov.
Mm-hmm.
And right at the bottom of the page is the Business Help Center. You click that button. The 7th option on the next page is to cancel, withdraw, or terminate a business registration.
Yeah.
So for anybody out there who needs to terminate their registration with the Secretary of State officially, that's the way to do it. And I think that would satisfy the requirement, right? It would dissolve it?
Yeah, I think so. Yeah. Again, a lot of people like to keep the corporate or business name going because they feel like they may start another business later on down the road, and they don't want to pay legal fees to reincorporate or reform an LLC or whatever it happens to be. So they're willing to pay the annual fee which has been waived the last couple of years. But yeah, this is way too much hassle just to keep a name going.
Yeah, and it's getting waived for 2025 as well. I believe it said on the homepage. So
yeah,
but this all this discussion put me in mind of something, Walt. That last time I was on, I was asking about help in deciding whether or not to file for our HOA, and you said you were going to look at some of the agencies that that there might be resources to help determine this sort of thing. And out on the homepage, they talk about be aware of fraudulent solicitations related to reporting beneficial ownership information to FinCEN. So did you ever find out anything about legitimate folks to help, or?
No, I didn't. We did research it, and the thing we found is exactly what you found in regards to HOAs, is that depending upon how you form the entity. Now, if you form the entity as like most HOAs, that it's kind of a membership organization, and you didn't file as a 501c6 or 7 organization, then you weren't exempt from this filing. But if you did file a 501 C application and then got the status and filed those 990s, then you meet that exemption that's in the instructions for the FinCEN report. So we didn't find anything.
Okay, are those 990s, are they unique to 501s, or is that for anybody registered with Secretary of State?
Okay. No, it's not unique, because I do 990s for several organizations here in the state, and there's a 990 N as in Nancy form, and that's for entities with less than $50,000 a year in gross receipts. And so I would assume your HOA qualifies for that, and it's a postcard form, and you file it online, and once you're set up, then it only takes, a few minutes to file that form. You got to do that every year because it's in lieu of a 990. And then if you have more than $50,000 in gross receipts and don't have a lot of assets, you file a 990 EZ. And I file a bunch of those. And then we also file 990s, and those are really big headaches. The diagnostics that our tax software kicks out it gets to be whack-a-mole. You answer one question and another problem pops up. And so tax-exempt or charitable tax-exempt organizations can really be a headache. But you also alluded to something. Go ahead, Jeff.
I was just going to say, the reason I asked is we have filed 990s, so I didn't know if that qualified us just on the basis of filing the 990s. So,
I think if you've been filing 990s, Jeff, I think you're going to be exempt. You're under that list of exemptions. Because CPA firms and tax accounting firms and banks and credit unions and S&Ls are exempt from those BOI forms. But there's a laundry list of about 25 types of businesses that are exempt. So if you're filing 990s, then you were set up to be a 501c6 or whatever it happens to be. And so you should be good to go.
Okay.
Yeah.
Well, I appreciate that.
Yeah. Happy Thanksgiving.
You too.
Oh, but you did mention something about fraudulent forms. I had a client that was sent a form that said, "Hey, it's our annual record service," and I'm showing these forms to Peter. It's IRS Form 5102.
5102. I like that one.
Yeah, and it is a fraudulent form.
Wow.
And so if you get this on the internet.
And the filing fee is $119, by the way.
Yeah. And so this is a fraudulent deal, and I looked it up for this client because she said, "Hey, this looks like a scam." And I said, "Becky, it is a scam," because I looked it up. Form 5102 does not exist from the IRS. They have a publication number 5102, but not a form.
Here's what we need to do. We need to find out who's sponsoring this and make sure they don't sign up for the FinCEN and they get dinged. I think that would be perfect irony.
Yeah. Well, if you're that kind of person, they're
sure.
probably not going to be. But it's kind of funny. It says mandatory beneficial ownership reporting. Yeah. Right. So I told Becky this is definitely a scam. Don't answer it. Don't do anything but eliminate it. Delete the email. But I was able to print out what she got, and yuck. Okay, thanks,
There's always
Jeff.
somebody out there trying to get something some way, isn't
You
there?
bet. Jeff, thanks for the call, buddy. Appreciate it. All right, we're going to come right back. We have a 1-minute timeout, and that means we have about 7.5 minutes left with Walt. If you have a general tax question, you want to get it in now before we're done. We're out of time. But you'll be back in a week or so?
In a week, a week from Wednesday.
A week from Wednesday. So if you missed Walt today, then you can get Walt a week from this Wednesday. So because we're getting so close to the end of the year, tax questions become ever so important. So we're going to come right back after this 1-minute timeout. Okay, we are back, and just a few precious minutes left, and Dave is standing by. Dave, good morning. You're on with Walt. Go ahead.
Hi, Dave.
Yeah, good morning. You and I are both concerned about government spending and wasteful money going out. But I have a question for Trump, an appointment of Elon Musk to help limit that spending when he personally benefits from $7,500 subsidies to electric cars. And I'm curious, is that the right person to cut government spending?
Is that the right person? Well, from what I understand, and you can correct me if I'm wrong, is that both Elon Musk and Vivek Ramaswamy are going to be the people in charge of a agency that's not a part of the federal government, but they're going to exist to provide guidance to Congress and the president on what to cut spending wise. So I don't think that entity is going to have any authority to do squat, but they're just going to be an advisory. So is that what you understand? That, because I understand the potential conflict with the $7,500, but if he's not in a position to make changes, I don't see a conflict.
Well, I agree with you, but I'm just curious to see if, will he actually advise the government to cut that subsidy? I mean, it would hurt his bottom line, and it does, he is conflict of interest to his own personal wealth to cut that kind of subsidy.
Yeah. Well, that $7,500 tax credit on electric vehicles, I think that was put in place several years ago. And it was all part of this green agenda. It wasn't part of the new Green Deal because I think the Inflation Reduction Act extended it or made it more applicable to more cars, but well, you mean
the deficit increase act? Is that it?
Well, yeah, that's Dave's point. Because right. the tax credit arguably increases the deficit, but if you want to promote the selling of electric vehicles, you create those incentives because
I saw.
What's the average electric vehicle? It's $20,000-$30,000 more than the average gas engine. So. Anyway, have we solved anything, Dave?
No, we haven't. We keep trying.
All right, Dave. Always a pleasure to hear your voice. Thank you very much. We appreciate it. And so we have exactly 3 minutes left. I know you got at least one more thing on your stack that you want to talk about.
Yeah. Well, I got 3 done of the 6.
Right.
And I've just been thinking about this. I can cover the 2 in the next 3 minutes. The last one involves trusts, and I'm going to say, if you want information on how you can reduce taxes on trusts between now and the end of the year, call me on it.
There you go.
But item number 4, between now and the end of the year, and the sooner the better, is if you have stock investments through a brokerage like D.A. Davidson or Smith Barney or, Merrill Lynch, whoever.
Right.
If your advisor has triggered capital gains, ask them to go through and look at if you have capital losses that, if you have an investment that's
will offset
is a loser,
right,
and it looks long term, it's going to remain a loser. Trigger that loss to offset the gains you've taken this year. It's called tax harvesting.
There you go.
And why not? If you got not everybody has winners, but everybody's got both, winners and losers. So that's a tax advantage. Most people that are on top of their taxes do this. And so if you don't, I recommend you give it a look. And then I think it was Jeff, the first Jeff. They're both number one in our books, right?
You bet.
He talked about, should I pay all this right now? And the concept is bunching deductions. So like Peter is philanthropic, and you typically give so much every year to a charity, but because of the standard deduction is so high, a lot of times it's better to bunch your charitable donations for 2 years into one. And the reason is you can get above that standard deduction. So that's something that you can employ now between now and the end of the year. So have we eaten up our 2-3 minutes?
Pretty much. Now, well, we do need some contact information for Walt, Kero,
please.
Oh,
yes. Well, you can reach me at 406-549-2288. Our website is Kero Byington CPAs, and that's kbcpas.net, and that's the best way to reach us.
All right. Always a pleasure, Walt. Thank you.
Oh, yes. And everybody out there, have a wonderful and happy Thanksgiving.
You bet. And Nick will be back tomorrow. We'll have open phones for the first hour, and then it'll be the Chamber of Commerce hour. And I do believe the Chamber has just named a brand new CEO, and I'm guessing that might be exactly what we might be talking about. So at least I'm thinking, right? No, I'm sorry. It's Econ 101 that's on tomorrow. So that may be the guest. We'll find out. But anyway, thank you for all your calls. Have a great